What does it mean when someone says invest in a stock market index fund? What's the difference between a stock market index versus a stock market exchange? These are all questions we're going to answer in this video. So welcome to my channel called Investing Sucks, where the goal is to educate and inform the average retail investors out there. And with that in mind, we'll get right into it. So we'll start off by explaining what a stock market index is versus what a stock market exchange is. So all an index is the total of the share prices of certain companies that represents a segment of the financial market. And the price of this index is designed to give investors information on how well the company's stock prices that are tracked within that index are doing overall. Now, a stock market exchange does not track the value of stocks. It's just a central location where people go to buy and sell their stocks. So examples of this would include the New York Stock Exchange, the London Stock Exchange, the Toronto Stock Exchange, and many more, which are typically based on region. And it's all it is where you go to trade the stocks of the companies that are based within that region. So let's illustrate this further by using the example of a flea market. A stock index would be the total value of all items included within that flea market, whereas a stock exchange would be the flea market itself, as in the location where people go to buy and sell items. So there are many different stock market indexes out there, but if you live in the US, the three most common indexes are the Nasdaq, the Dow Jones Industrial Average, and the S&P 500, with the S&P 500 being the most looked at and tracked index. So whenever you hear someone say the market was up today, they're most likely referring to the S&P 500 index. So the S&P 500 index is the 500 largest companies in the US based on market capitalization, which is just the company's stock price multiplied by the number of shares they have issued. And the reason this index is so watched is because the 500 companies that make up this index represent over 80% of the total stock market value of the entire US stock market. The next important index to note is the Dow Jones Industrial Average, and this index is much smaller, representing only 30 of the largest and most influential companies in the US, making it more exclusive than the S&P 500. And these are more established companies, so a change in value of the Dow Jones Industrial Average means only these 30 companies saw a change in value overall. And lastly, there's the Nasdaq Index, which is an index that's actually based on the Nasdaq Stock Exchange, which is where technology stocks and some stocks from outside of the US are traded. However, keep in mind, there are many other indexes out there, such as the Wilshire 5000, which tracks a lot more companies compared to the S&P 500 and is often referred to as the total stock market. And for investors from abroad, I've included some other important indexes, and I'll leave those up on screen for a while so you can take note of them. Indexes can also be broken down into sub-indexes that are designed to track the performance of share prices for companies in a specific industry. So we often hear the term invest in the stock market, but what does this really mean? Well, usually it just means investing in an index, like I explained, through an ETF or an exchange-traded fund, which is financially engineered to mimic the exact price movements of that index. So if you want to invest in all the companies in the S&P 500 index, but don't have the ability to invest in each of the shares individually because it's expensive and impractical, you'd invest in an S&P 500 ETF, which allows you to own all the shares in that index at a much lower entry point. So even if you only have $100 to invest, you can still grab a piece of the S&P 500 index. And we're often told that beating the market over the long term is highly unlikely, and it's better to just invest in the market itself. And all historical data and all research on this topic proves this point. So when you hear people say that, you now know that they're referring to most likely the S&P 500 index if they're in the US, and also the TSX if they're in Canada, or whatever predominant index is used in that specific region. So anyways, I hope you found this video helpful. If you did, please let me know by leaving a like and subscribe for more videos.